What's up, traders? So today I'm going to show you how I've been using MicroStrategy, ticker symbol MSTR, in order to generate an extra $2,000 to $3,000 per week swing trading. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I use the money that I generate from selling options in order to provide for my entire lifestyle. I wholeheartedly and 100% believe that everybody should be involved in the stock market and that everybody should be trading in order to bring in more income. You know, in this world of social media and this person saying they make this much and this person saying they make this much, people can become numb to the impact that this additional income could generate on their lives. Say you have a smaller account and you make about $200 per week. Well, $200 per week is $800 per month. Well, what can you do with that? You can probably pay your car note with it, and you might be able to pay your car insurance as well. You know, or what if you're making $500 per week? Well, that's $2,000 per month. That probably takes care of your entire mortgage. Like, how would that change your life if you no longer had to pay your mortgage from the money that you make from your 9 to 5, and you could simply pay it from the money that you make from trading? Like, the impact could be crazy. And you know, nowadays, over the years, I've been making much more than that. However, it's not lost on me how big of an impact that a small amount per week can make. But I'm done with my little rant. I just had to get that out. Now let's look at how we could possibly trade MicroStrategy to bring in more income. Now, if you're not familiar with MicroStrategy, it's simply a business that helps other businesses make smarter decisions using their data. They create software that takes a lot of data and takes the information from the company and puts it into easy to understand charts, data sheets, and things of that nature. And this helps those companies figure out more things like how to sell more products, save money, or even improve on services. However, the reason that they become so popular in the stock market over the last few months is because they are the largest corporate owner of Bitcoin. And we can see here from this simple Google search, they own 402,100 Bitcoins currently, or at least as of December 2nd of 2024. And MicroStrategy states that the average purchase price was at $58,000, which Bitcoin is now at $97,000 as of today. So not only is a lot of their market cap tied into Bitcoin, they've also made a killing off of it already. And with the upcoming administration being very bullish on crypto, they could see massive gains over the next 4 years. But let's take a look at the company. So we can see here that it is currently an $80 billion company. And if we scroll down, all 8 analysts that are currently covering the stock all have it as a strong buy. All right, so if I look deeper into the analyst ratings, we can see that all 8 analysts have had it at a strong buy for the last 3 months. And we can see their price targets. They have a mean target of $527, a high target of $650, and a low target of $270. Now, if we come over to the chart, we can see that it's had quite the run up over the last several months. If we look down here right before the election, looks like it closed at a price of $227, and it got as high as, a high of $504 just on November 20th. And now it did have a little pullback, and it looks like it's kind of consolidating in this area here. Looks like between 360 and 450. But the reason I've been trading it lately is because the implied volatility is so high on this stock. And the more stock price is expected to move, the higher the implied volatility is going to be. And the higher the implied volatility is, the more premium you can receive for selling contracts on that stock. So what I like to do with MicroStrategy is I sell puts far out of the money at strikes that I don't believe will be touched by the expiration date. And there are 3 data points that I look at prior to entering into any trade such as that. But if you're new to options, when you sell a put, you make money if the stock goes up, you make money if the stock doesn't move at all, and you make money if the stock goes down just slightly as long as it doesn't go past your strike price. Now, when you sell a put, you are agreeing to buy 100 shares of the company at the strike price. And for doing so, you get paid money up front, sort of like an insurance premium. And for receiving that money up front, you're essentially taking on the risk of the stock price dropping dramatically within that time frame. So there are 3 different data sets that I like to look at that I found has given me the best probability of profit. So I'll show you those now. And if you have a smaller account, make sure you also stay to the end, because I'll show you a different way of making this exact same trade if you don't currently have that much in your account to trade. So the first thing that I look at, and the most commonly used, is the delta. Now, delta helps you measure the probability of an event occurring. So if the delta says 0.10, it is saying that there is a 10% chance that the stock price drops to that strike price by the expiration date. Okay, or if the delta says 0.15, it's saying there is a 15% probability that the stock price drops to that strike price by the expiration date. So I'm here at MicroStrategy's options chain, and we can see we have the delta column right here, but I will scroll down to the puts. And I want to select a delta that is 0.20 or below. So we can see that $345 strike here is right at 0.20, and I would currently receive about $603 for opening this contract right here, right now. Now, if you're new to the options, yes, it says 6.03, which is $6.03 per share. However, every options contract is worth 100 shares. So you would simply multiply that $6.03 times 100, and you will get $603. All right, so we currently know that we won't go any higher than a $345 strike. So now let's move on to the second data set, which is the expected move. So here I am, I'm looking at the expected moves. If we come down here, I want to look at the date that I'm currently interested in, which will be this Friday, December 13th, 2024, since we are opening this up as a swing trade. Now, it looks like as of right now, it is expected to make about an 8.01% move from now until then. And so that puts us at an upper price of $408.72, or a lower price of $348.12. All right, so the 0.20 delta was at 345, and it looks like the expected move isn't expected to go below the $348 mark. So that's sounding great. Now let's look at our third data set. But wait. What if you can make money while on vacation, while spending time with your family without constantly worrying about bills? What if you can make the money for your entire vacation while on vacation? I personally trade options full-time and generate multiple six figures per year, enough to comfortably provide for my wife and 6 kids, and our multiple vacations per year. In Trade to Freedom, I'll show you how to create passive income streams that keep paying even when you're not working. You'll get my exact trades as soon as I answer them. Imagine being able to take that trip you've always been dreaming of, knowing that your money is still working for you. The link is in the description below. I'll see you in the community. And the third thing that I look at are the Bollinger Bands. Now, Bollinger Bands are the only technical indicator that I essentially use for this strategy. And if you're unfamiliar with them, you can see them here. They are these black lines, but they simply aim to show you the price that the stock price is expected to stay within. And it tends to be very accurate. And the very few times that it is not, the price typically tends to revert back into the Bollinger Bands in a very short period of time. So even during these recent times of high volatility with MicroStrategy, you can see it popped way up out of the Bollinger Bands here and then quickly reverted right back in. But I want to look at the lowest Bollinger Band line here, and we can see that it is currently at $356. And now that I have that information, what I do is I take a look at whatever the Bollinger Band price is and the price that the expected move said, and I compare whichever one is the lower amount is the one that I want to use. So in this case, the Bollinger Band is a little higher than the expected move. The Bollinger Band is 356, the expected move was 348, so I will use the expected move price of 348 when I'm thinking about my trade. So let's go back over to the options chain and take a look at the trade. So here I am in the Thinkorswim platform, and I have MicroStrategy pulled up on the options chain, and we can see it's currently down 4% for the day. But if we go down, we've already selected our date, which is this Friday, December 13th of 2024. Now, if we scroll down, now remember we said we want to be below a delta of 0.20, and our expected move had us at $348. So 348 is a bit higher than the delta of 0.20, so we're going to go 0.20 or less. So that means we'll do $342.50. Now, MicroStrategy is a very, very volatile stock. So if you want to enter into the trade right here, right now, at that $342.50 strike, you'll make about $565 per contract, which is great. However, I like to be a little bit more conservative when selecting strikes, especially with more volatile stocks such as MicroStrategy. So I may personally go a little bit more conservative on the strike, and I would probably come maybe, let's say, to this $320 strike here. Because even there, I would get about $327 per contract. So if I wanted to go ahead and place my order, I'd right click, hit sell, go to single. And now I need to select how many contracts that I would like to open. And let's say in this case, I want to do about 10. So I'll go to 10 on the contracts. And you can see here that I would immediately receive a credit of $3,246 for opening this trade right here, right now. Now, I know that seems like an amazing amount of money to make here within the next, 4 days. However, there are no free lunches in the stock market. Now, when you sell these contracts, you are agreeing to buy the shares of the company at the strike price if the stock were to tank within that time. So when doing this strategy, you want to make sure that you're doing it on a company that you would like to own just in case the stock price does fall. Like if you see here, you can see on this max loss column, it says a max loss of $316,750. Now, don't let that number scare you. That is saying that if the stock were to go to zero within the next 4 days, that's how much you could lose. And as long as you're trading a high quality company, the chances of that happening are very, very slim. Now, what if you have a smaller account, but you would still like to benefit from the high implied volatility of MicroStrategy? Well, what you could do is use a leveraged ETF that follows MicroStrategy. If you're not familiar with leveraged ETFs, it is simply an ETF that follows either a single stock or a sector and looks to move 2 or 3 times the amount that the sector or stock that is following moves in a single day. So an example would be a leveraged ETF that follows MicroStrategy. If MicroStrategy moved 1% in a day, then the leveraged ETF will look to move up 2 or 3% in a day. And the same is in reverse. If MicroStrategy were to go down by 1%, then a leveraged ETF will look to be down 2 or 3% for the day. However, leveraged ETFs typically have a much smaller stock price than the sectors or the stocks that they follow. And my personal favorite leveraged ETF that follows MicroStrategy is ticker symbol MSTX. So I pulled up MSTX in the options chain, and you can see it's a 2x leveraged ETF to MicroStrategy. And you can see that it's currently down 9.45%, which is double of what MicroStrategy is down currently. So I pulled up this Friday's expiration, and if we come over here, I would simply want to select the delta that was lower than 0.20. But remember, with this, we want to be conservative. So let's say instead of this $77 strike, maybe I'll go to 70. The stock price is currently at $90 right now. So as long as MSTX stock price stayed above $70 by this Friday's expiration, I will just make my money and go about my day. So we can see at the $70 strike, I would receive anywhere between $135 and $150 per contract. And that's just at the 0.11 delta. I mean, if you want to be more aggressive, you can certainly come down and do the 0.20 delta at $77, and you would get $265 to $300 per contract. And that is an amazing return on your money. I mean, if we were to even calculate your return on your investment, let's see, we'll do 2.65 divided by the $77 strike. So that would be a 3.4% return on your investment for that 1 week. Now, however, if we annualize it, there's always 52 weeks in a year. So we'll times that by 52. That gets you 1.78, which you'll then multiply by 100 to get your percentage. That is 178% return annualized, while the market averages 10% per year. If you can continuously do 178% per year, then you're probably going to be one of the richest people in the world over the next several decades. But folks, that's how I am trading MicroStrategy currently and making an extra $3,000 per week. If you got anything from this video, please make sure you like and subscribe. If you would like to learn more from me, come and join the community, Trade to Freedom. The link is in the description below. Not only will you get my exact trades in real time, you will get my entire framework on how I trade options. We just scratched the surface in this video, and I look forward to seeing you in the community. However, I'll also see you in the next video. Peace!